Welcome back to FT Markets. Argentina's recent default captured the headlines not just because of the impact it had on the country. It was also important because Argentina ran into a messy legal battle in the US with holdout bondholders who refused to accept a debt restructuring. Now the industry's reacted not just to Argentina but also to the earlier chaos in Greece over its debt restructuring. With me to discuss the latest initiative is Elaine Moore, my colleague on the FT's Capital Markets desk. Elaine, very briefly, just tell us what this latest initiative is about.
So this initiative has come from a group of banks, lawyers, brokers. These are all market participants, and they've come together after months of discussion, backed by Washington, and they have suggested new clauses that they think should be introduced to bond contracts, and they say that these should prevent a repetition of what's happened in Argentina. Okay,
I know this is very complicated, subtle issues, but can you explain very briefly what the difference would be? This would be in new contracts for new bonds, not for existing bonds.
This is for new bonds, so you can't retroactively put these into old bonds unless you set some sort of law about it. So this would have to be a voluntary movement by the issuers, by governments.
Okay.
And there are two main changes that they're talking about. The first is this thing called a pari passu clause. This was a huge deal with Argentina. What they want is for this clause...
It's about equal treatment.
Equal treatment, to make it very clear that it doesn't mean that bondholders are paid the same. It means that bondholders are treated the same. This is a distinction, exactly. The second change would be if a country defaults on its debt and if bondholders are asked to agree to a restructuring of that debt, it wants there to be a system where if a majority of bondholders agree, so 75% of all bondholders, then the other bondholders are swept along with that change. So you can't have holdouts disagreeing and asking for full repayment.
Okay, question for investors, of course. Does this mean that governments are going to have to accept, I guess, higher borrowing costs? Will investors demand a bigger risk premium because they're more likely they'll be swept into some restructuring?
That's what we don't know yet, and perhaps that's why governments have been slightly reluctant to be the first ones to introduce these changes, although this is very recent news. This only came out last week, so that also could be why it takes a little bit of time to make these changes. But at the moment we don't know. Would it make older bonds less liquid? There are lots of unknowns here.
Okay, and I suppose the other big question goes, is this going to make government debt restructurings easier in the future?
I don't think it'll make it easier, and this is also the sort of the tail end of what happens when a government can't pay back its debts. This is when you've got to the very final point of no return. So there's a lot of other movements before then. You have the International Monetary Fund that gets involved. You have all sorts of things can happen first.
We should bring up our chart, of course, showing which you brought along, showing the massive rise in litigation.
This is what it should really address. So it shouldn't be the case necessarily that you have less countries defaulting on debt. What it should change is the number of creditors who take the countries to court and argue for full repayment of their bonds.
Lots of this rise, we should explain, is obviously due to Argentina.
A lot of the rise is due to Argentina, but you should also be aware that there's been a huge rise globally in the amount of sovereign debt in the world, and there has been a huge increase in the number of creditors taking countries to court. So there have been countries, as well as Argentina, there's been Peru, there's been Congo, there have been other cases. Other defaulters, other cases. And these are generally seen as just not good for markets. It disrupts the process of restructuring. It makes things uncertain. Everybody agrees it's not a good thing.
Yeah, but of course, on the other side, there's an argument about whether it is a good idea to make government debt restructurings easier, because it might encourage governments to restructure debt more often.
That's definitely a part of the argument against some of this. There's also the idea that if a government is in trouble, that there needs to be consensus from bondholders, that it's not fair that bondholders should be taken along if there's a 75% agreement, that still 25% may not have agreed with the terms.
So potential there for future arguments. Elaine, thank you very much. So some very subtle issues there, but some quite important changes possibly coming through into new bond contracts in the future that might avoid some of the conflicts we've seen, for instance, over Argentina, but not necessarily all of them.